Good morning from the Protos newsroom. The date today is Thursday, the 19th of November, and you're listening to the Protos Daily. These are the main headlines this morning. Dubai whales bet $10 million on Ethereum 2.0, crypto exchange Liquid confirms hack, and Binance sues Forbes. At time of publication, Bitcoin is trading at $17,400, down 3% for the day, but still up over 9% for the past 7 days. Dubai-based investment firm IBC Group has pledged to stake some $10 million worth of Ether towards Ethereum's impending transition to proof of stake. As reported yesterday, the Ethereum 2.0 deposit contract has attracted over 100,000 Ethers. However, it's still quite far from its target of around 524,000 Ethers, the deadline for which is in less than 2 weeks' time. Indeed, even after IBC Group's additional 22,000 Ether, Ethereum 2.0 will still be nearly 400,000 Ether short of its goal, representing more than $188 million. To date, just $49 million worth of Ether has been staked. Multiple news outlets have reported that the number is expected to rise in the days prior to the 1st of December, as investors anticipating higher Ether prices look to avoid opportunity costs by locking their bags earlier. However, the fact that all Ether locked in the 2.0 smart contract must stay there until the transition to Ethereum 2.0 is completed, which could take more than 2 years, has become a deterrent for others. For what it's worth, Ethereum co-founder Vitalik Buterin remains confident there'll be a sudden influx of staked Ether before the December 1st deadline hits, and has even flouted the possibility of lowering the cap in a bid to push the update through. Crypto exchange Liquid has confirmed a security breach which took place on the 13th of November that involved hackers changing DNS records to access sensitive user data, as well as employee email accounts. The news was revealed by Liquid's co-founder and CEO Mike Kayamori in a blog post published 5 days after the hack took place, which has caused a stir among the exchange's users. Liquid says hackers were able to partially compromise the exchange and access internal documents. Kayamori has further clarified that while no cryptocurrency was stolen in the attack exposed personal information of users, such as emails, names, addresses, and encrypted passwords. The blog post goes on to state that the Liquid team has regained control of its site and will continue to investigate the case, having already sent emails to users advising them to change their passwords. JPMorgan Chase CEO Jamie Dimon has once again voiced his support for blockchain technology, but maintains that Bitcoin isn't his cup of tea. Speaking at the New York Times Dealbook conference, Dimon, whose bank recently launched its own JPM coin, said that blockchain has a pivotal role to play in the future of finance and making it cheaper to move money around the world. However, while he did acknowledge that very smart people are buying into Bitcoin, he stopped short of showing support for the currency specifically, instead citing his belief that, due to its size, it will inevitably become subject to stricter government regulation. Dimon's apparent about-face on crypto comes roughly 3 years after the outspoken Wall Street insider labelled Bitcoin a fraud, saying if you're stupid enough to buy it, you'll pay the price for it one day. While some interpreted Dimon's backing of blockchain technology as a softening of his anti-Bitcoin stance, Dimon later clarified, "I never changed what I said. I just regret having said that, and I didn't want to be the spokesperson against Bitcoin. I just don't give a fuck, and that's the point." Binance is suing a 103-year-old business and finance outlet Forbes, as well as 2 cryptocurrency journalists, over an article that contained reportedly leaked internal documents showing an alleged concerted effort to evade and deceive worldwide crypto regulators. The Forbes article was published to its website on October the 29th, claiming the Cayman Islands-based exchange planned in 2018 a strategic bait and switch to confuse and insulate Binance from US authorities. Binance, which was first launched in China in 2017, has rotated its headquarters multiple times in the past few years to avoid worldwide regulators. According to Forbes, the leaked Tai Chi document allegedly advised the creation of a US-based subsidiary that feigned interest in compliance to district regulators, using it to funnel profits earned in the US to its offshore parent company. The documents, which are said to have come from an ex-employee, also encouraged Binance US-based workers out of the country to avoid potential police attention and proposed teaching potential customers to use VPNs to avoid geographical restrictions to trade on the platform. On Twitter, Binance chief executive Changpeng Zhao denied the plan after the article was first published, questioning the authenticity of the document and its source. Binance is reportedly seeking millions of dollars worth of damages, as well as a full retraction and apology. As for Forbes, the editors say they stand by their reporting. Associates of Grammy award-winning rapper T.I. will pay more than $100,000 in penalties and fees after being found guilty of participating in unregistered and fraudulent initial coin offerings. The Security Exchange Commission announced charges against the three persons in September, alleging that the initial coin offerings were unregistered and fraudulent. A separate lawsuit filed in 2018 by 25 spurned investors claimed T.I. & Co. effectively ran a pump and dump on Flick. Chance White, Owen Smith, and T.I.'s social media manager William Sparks Jr. have been ordered by the US District Court for the Northern District of Georgia to hand over $102,992 for their role in selling tokens in initial coin offerings for Flick and CoinSpark. Sparks was later charged with violating registration provisions, while White and Smith were nabbed for violating registration and anti-touting provisions. As part of the same investigation, T.I. was ordered to pay a $75,000 penalty and is not able to participate in offerings or sales of digital asset securities for at least 5 years. It turns out that Bitcoin whales are still dominating crypto markets, casting doubt as to whether the recent bull run was really caused by a widespread uptick adoption. The head of data science at analytics firm Flipside says around 2% of Bitcoin addresses currently control 95% of the cryptocurrency in circulation. That concentration has also risen since July, indicating Bitcoin whales now hold an even bigger influence over the price of Bitcoin, having accumulated even more crypto in recent months. Flipside's Eric Stone told Bloomberg that whales continue to be a significant force behind the Bitcoin market overall, saying, "The most likely whale story today is that they'll cautiously liquidate relatively small amounts of Bitcoin over time, rather than risking a supply shock by liquidating larger chunks all at once." As for the number of small fish in Bitcoin today, more than 70% of Bitcoin addresses have less than 0.01 Bitcoin, which is worth just around $170 at today's prices. Thank you for listening. To stay up to date with the latest from the world of crypto, make sure you subscribe to the Protoss Daily on Spotify, Apple Podcasts, and all other major podcast providers.